All right, let's take a look at gold and the stock market in today's video. The stock market is going to have a huge effect on all other markets here in the weeks ahead. I'll explain in a minute. But in my last video, I was looking at gold. It looked like it had found at least a daily cycle low, and we were starting the advancing phase of this second daily cycle. I was kind of hoping maybe we could gold could get to 1900, or even maybe a long shot might get to 2000 before this rolled over. But it looks like at this time anyway, it looks like that this cycle is probably topped really quickly. And I warned everybody yesterday, I guess it was, to just go ahead and take what small profits we had here, as this was looking pretty iffy. Looking like this second daily cycle had probably topped and was getting ready to left translate and ultimately make a lower low. And now let me go over to silver and I'll show you why I say that. So if this was the daily cycle low in silver, you can see it already has left translated and failed, and this pivot has broken, so we're making lower lows. So that was a big clue here, and I suspect that gold is going to follow follow silver and make a lower low and confirm that this second daily cycle is indeed left translating. And as I've noted, we're almost certainly we were in the declining phase of the intermediate cycle. So the odds were always pretty high that the rally out of this daily cycle low was probably not going to be able to make a higher high above this. And if it did, I warned people that the cartel would smash this before it could get any kind of a sustained move above 2000. So, just a long shot that it might get to 2000, but it looks like it's already topped here. So, as I said, I advised everybody to just take profits on the long position that we had here, and we basically got just a small little base hit or break even, and now we're back on the sidelines. And this daily cycle is still very young, so it should have a lot of days to drop before the final low. I don't really expect a final bottom till sometime in April, early April at the earliest. Might even last till mid-April, or maybe even early May, although that might be stretching things a bit. But we will be waiting for that bloodbath phase, and then that's the point at which we will want to get long again. We made some really good money out of this run. We got out right in here and waited on the sidelines for this, for the move down into the daily cycle low to occur, which it did. Got back in here, made, like I said, just a tiny little profit here. And now we're just back on the sidelines. We understand that we're in the declining phase of the intermediate cycle, and this is not really a time to play the long side. Or if you do, you got to be prepared to exit quickly, which is exactly what we did. All right, now let me show you the stock market, because this is going to have a big impact on everything else. And I've noted this before, that this rally out of this intermediate cycle low just hasn't really gotten a lot of traction. It's been very volatile, very hard to hold on to positions. You're just getting these big volatile pullbacks that kind of, that knock you out of positions. This first daily cycle stretched really long. And now this looks to me like we've probably got a daily cycle low here. And then we've got a very similar problem here in the stock market, in that there is potential that this may be a daily cycle that has topped on day 2. Now, there are two scenarios here that could play out, but whichever one it is, we've got a date with a really scary move down into an intermediate cycle low here soon, during this third daily cycle. I'm not not sure whether this is a top or not. It's very unusual for a cycle to top on day 2, and that would produce a very destructive decline if this is in fact a daily cycle top. But I'm not sure that has happened yet. We may still get a higher high and then roll over and start moving down. Too early to tell, but I will say that it's somewhere ahead of us into that early to mid-April time zone, we're going to have a very scary, probably some kind of a semi-crash event that I think could very well test these October lows, even a slight chance that we might go below the lows and keep the bear market intact, although that's probably not the highest odds scenario, but a test of this October low, I think, is a very high probability event. And when that happens, it's going to trigger panic. It's going to trigger margin calls. Everything's going to get thrown out in a panic selling event. That includes energy. It's going to include the metals. It's going to include the miners. So until we finish the intermediate cycle low in the stock market, there is just no need to try and pick a bottom in anything, because you've got the guillotine of this final move into the intermediate cycle low in the stock market hanging over your head. And when it really starts to get rolling aggressively, and we get into that final 5 to 7 day bloodbath phase, like I said, the margin calls are going to be huge, and everything's going to get panic sold. So until we see that panic selling event in the stock market, you really don't want to try and play anything from the long side other than maybe a day trade here or there. But you don't want to take any longer term positions anticipating a sustained upward move, because it's too late for that to happen. All right, so now let me give you the 2 scenarios that are likely to unfold. And keep in mind, we've got a trigger event out here on the 22nd with the FOMC meeting. So this could progress in 2 ways. We could either kind of grind lower and maybe some back and forth whipsawing action, and get a temporary, well, maybe not even a temporary bottom, but just kind of a grind lower into that FOMC meeting. And then if the Fed raises a half a base or 50 basis points, which is becoming the higher probability event, and for them to reverse course and go from 25 to 50, it is going to shock the market, and the market is then going to do this. It's going to crash, and we're going to come down to test these October lows. So that's one scenario. If we just kind of grind back and forth for the next 2 weeks, and then we get to the FOMC meeting and they hike 50 basis points, then you can bet the farm where the market's going to crash right after that. The other scenario is that we crash going into the FOMC meeting as the market anticipates that 50 basis point hike, and then when we get it, we get a bounce, and then an undercut that gives us that final intermediate cycle low out there in early to mid-April. So I don't know which way this is going to unfold. I kind of think maybe the odds favor the first scenario a little bit better, but it, I could very well be wrong, and then the market starts to get very nervous about that 50 basis point hike, and we crash into the FOMC meeting instead of coming out of it. But either way, between now and April, we've got a very destructive panic selling event that is going to put pressure on everything. So you just probably don't want to be trading from the long side right now. And I do have a couple of spots open for the SMT premium newsletter if you want to get on board and kind of, we do have some short positions here, so I think maybe we can make a little money on the short side here as we move down. If you want to get on board the SMT and get in on one or two of these short trades for what I think is about to unfold here, email me. I'll include my email address in the description below.